The broadcast is now starting. All attendees are in listen-only mode.
Hello, good evening to everyone. Please, if you can confirm me, you have a chat box over there. If you can confirm that you can hear me okay, and also that you can see the screen. In the screen, you should be seeing the financial forecast website. Please, someone over there, so we can start. Everything is okay. This say Wonder, Chill, we, Sheyan, yes, okay, perfect. Piero looks good. Yeah, Nicolas, yes. Okay. Nick Hill, yes. We can hear you, sir. Thank you. Fins are good. Okay, Osvin, yes. A lot of people are saying thank you. Anastasio say yes. Dolly also. And okay, Siwu also okay. Perfect, nice. Hello to everyone. It's very nice to have you here. Again, I don't know if you joined the last month, this same webinar that we did. I don't know if you are repeating it. If you are repeating it, it's perfect because we will refresh concept. If not, it's always good to have a starting point about Elliott Waves. And it's such a nice theory principle, but it's sometimes it's so difficult to understand. And many experts tend to make this really complex when can be much more simpler. And today we will try to do that. We will make a Elliott wave principle easy, understandable. We'll go through the main rules, but also what we should be avoiding about the principle that is really not good to keep that in the practice. Yes, so. And also at the end, once we understand how Elliott waves works, we'll see really what is the fractal behind the financial markets. Yeah, it's not exactly as Elliott described it. It's a little different. It's much more simple. It's more close to what Mandelbrot was saying. Mandelbrot also studied the financial markets in 1970s. Okay, he introduced this fractal concept to this work, and we'll see that it's more simple and what we need to keep in mind and how to analyze the market, the real-time market, when the patterns are incomplete. That is the most important if we want to make decisions on this, okay? So we have there a brief introduction to what we do today. So you have the screen over there. I need to activate the pen so I can just draw if I need to draw. And I also will activate the camera so you can put a face to the person speaking on the other side. I would like to know, where are you from? I see people from everywhere. I see Spanish speakers. I see probably people from India, Sam, Venkata, also India, Uso, Nigeria, welcome. I think we are quite spread around the world. Susan is from Canada, nice. Opala, India, are from Delhi, India also. Many people from India, nice. New York, Hill. I heard that New York is much better now with all the corona. That's very nice to hear. South Africa, Veli, Malaysia, Nicolas. India, we have Harish, Maxwell from Nigeria. Hill Almeida, this should be Spanish, Argentinian, South American. Yeah, or maybe. Gracias is saying there. I am, Argis is asking where I'm from. I'm born in Argentina, but I'm living currently in the Netherlands, in Amsterdam. Beautiful city. Okay, I will activate the camera. Nigeria, India. Telma from Nigeria. Great. Okay, Emirates also. Nice. Rodrigo Vega from Argentina. Alegría tener gente argentina por este lado. Ok, he activado la cámara. I activated the camera. For all those Spanish speakers, so I will put you can see. By speaker, we will repeat this webinar next week. Okay, so if you want to follow this in Spanish, you will have it. Yeah, next week, same day, Thursday, and same time. Okay, he'll say Ronaldo, Messi, exactly. Okay, so we have everything. I will put the PowerPoint. Lucas, thanks a lot. You're welcome, Lucas. Really, I enjoy doing this quite a lot. Okay, so let's move to the PowerPoint. Okay, first thing, as we will review a lot of content, we will try to make it fast and easier. So this webinar will last around an hour 15, an hour 30 minutes. Okay, we'll see graphics and we'll see content. So the PowerPoint, if you want the PowerPoint, what you need to do is request a PowerPoint. It's for free. Yeah, you need to send me an email to info@thefinancialforecast.com. Okay, if you want the PowerPoint, just send me an email and I will forward you the PowerPoint. Then all the graphics we will check. If you have free access to the graphics, everything is accessible from thefinancialforecast.com. You need to go to free forecast. You subscribe and you will have all the free graphics that we will see today also. Okay. Questions you want after the session? Want I review your analysis? You want to send me your analysis? It's more than welcome. I will review it. I will check it, and I will give you feedback about this. So you can send me that through the email. If you have any specific question that we couldn't solve during the webinar today, also the same. Yes, send me an email, and I will try to come back to you in less than a week. Yeah, in the coming days. I used to answer all the emails before the week ends. Yeah, but I will have only 2 days. Yeah. So okay, we have here in free forecast, you have access to the forecast, and then the email where you need to send for questions, just feedback, is the one you have here, info@thefinancialforecast.com. Okay. See who was asking. Okay, Uso, I will try to keep your email. Yeah, but if you send me an email, it's better. So because that way I don't lose the track. Yeah, and I can send you. Yeah, if not, my mind sometimes can fail and I just forget your email. But in any case, I will mark it and I will try to send it after the webinar. Okay. If not, if I forget it, please send me a reminder to info@thefinancialforecast.com. Okay, with this, we will start with the webinar for today. Okay. Here. Okay, what is the idea of today? We will have first an introduction about what are fractals. It's very important to understand what fractals are, because this concept already was described by Elliott. Yes, but he didn't know the concept of fractals. This concept appeared from Mandelbrot, of Mandelbrot, and he defined the fractals elements. So, but we will understand what are the fractals, trying to define what is our object of study. In this case, are the financial markets. Then we will move into Elliott Waves. We will discover the general concept, the 5-wave waves model, the different kind of waves that Elliott identified in 1930. We're talking about a principle that was developed in 1930, so a long, long time ago. And then we will see the math rules around this principle. Key element of this. The general concept is nice to understand trends and to go inside Elliott's mind. So that's why this principle is quite nice. Trying to understand everything from the root. The 5-wave model, we will go into it, but really we will see at the end that it's quite weird to see 5 waves nowadays in financial markets. We will see mainly a different pattern that is also described within the Elliott wave principle. Okay, and we will focus more on that. And of course, the math rules are very, very important because that really is ruling all the behaviors regarding length and time in the different instruments. After that, we will see, okay, we have knowledge about Elliott waves, so the next step is to bring this nowadays, yeah, to to 2020, yeah, to the year 2020. Why? Because everything changes, everything evolves, and doesn't make sense to keep a principle of the beginning of last century now. So we need to analyze, we need to adapt, we need to see what works, what doesn't work, and continue moving forward. And at the end, we will see how to analyze different kind of patterns, incomplete patterns, yeah, with real examples. And then at the end, we will see we develop in the financial forecast an artificial intelligence that compile of these principles and works in an automated way. Why we will see this? Because I want to see you the impact of managing in the right way all this knowledge, yeah, and if this can be really profitable or not. Okay, that's the key in the end of this, having a method that will be profitable for you when you want to invest. Okay, the financial forecast, probably you know what it is. So we are specialized in two fields. One is education. Yeah, the meeting is being recorded. It's asking Reyes. Sorry if I'm pronouncing this wrong. Yes, and will be in the blog tomorrow morning. Yeah, you will find the recording in the blog tomorrow morning. So we specialize in two fields. One is with the education, and the other one is the developing of tools like artificial intelligence that we are working now. And everything that we build, the backbone of all this are the 5 concepts that we have on the right side of this slide. Just to summarize and not go one by one, in the end, the interaction, the human interaction, social interaction, create different emotions that govern the different instruments, and this emotion share what all the mass of investors behave in a fractal pattern. And that is what we see in financial markets. Yeah. Why? Because we need social interaction to create economy. If there is no social interaction, then there's not economical activity. So we need that. And of course, everything that is involve human involve emotions. Yeah, and those emotions are shared when we are in these kind of activities by the group. And very easy example is what everything that is happening around COVID. If we remember at the beginning of COVID, in March, what happened? All the mood, all that sentiment around all the investor was really negative, and this brought the Dow Jones and different indices to a very strong collapse. And now everything is quite different. Yeah, that sentiment is different. We don't know yet exactly the impact. We don't know yet if we will have a vaccine or not, but the sentiment is totally different. And that's why we are seeing also now all the indices moving upwards. Okay, and probably we will create new maximum after all. Okay, but it's a very good example about that mood. A little about me. I am specialized in financial markets and asset management. I've been in this field already for more than 15 years. I've been working also with a company specializes in Elliott Waves, a very famous company online. And then I started this new project of the financial forecast, developing these tools, focusing on education. And in the meantime, I wrote a book. It's in Spanish at this moment. It's called Las ondas de Elliott, el comportamiento fractal de los mercados financieros, for those that are Spanish speakers. For the English speakers, we are trying to get this translate to English. Soon, I think we will have it. So we are talking with some publishers that they are interested on the book. And I hope to bring you the good news that we have the book in English soon. And I contribute with Investing FX Street and IATech, that is a technical analysis Spanish institute. Okay, that's in English. Instituto Español de Analistas Técnicos y Cuantitativos. Yeah, that's in Spanish. Okay, so let's go to start. What are fractals? The fractals, as I told before, this concept born from the hand of Mandelbrot. Mandelbrot was a French mathematician, yes, that described this natural phenomenon. And what is this phenomenon then? We're describing something that is happening in the nature. Okay, so it's a phenomena in nature. And what happened with this? We are talking about a very simple form, simple structures that repeat infinite times to create the same pattern and different scales. Okay, so but it's basic and it's fragmented. Okay, a structure that repeats, and we will see the same at different scales. And in nature is something very common, especially when we see the broccoli, the cauliflower, the galaxies. Yeah, we have a lot of examples coming from the nature that describe a very simple shape that repeats, and build a bigger scale of the same. Yeah, the same happened, for example, with a tree. A tree starts one branch, then divides into two, and we have the same repeating infinite times to create that tree. And everything is obtained by iteration. The iteration is the repetition of those steps. Yeah, we have a basic some steps to follow to create a fractal, and we repeat all the time the same. This is called iteration, and that we create the same structure at different scales. Very important, we need these two characteristics always in the fractals. The self-similarity, that means that at different scales we will see exactly the same, and fractal dimension, that we will describe later what is that. One example, okay, that we have here in this slide is the von Koch curve, okay, the snowflake, the snow as snowflakes. To build up this is very easy. We start with a straight line. We divide this line into 3 pieces, and then we remove the middle piece, and we add 2 lines that get contact in the middle. Okay, those are the steps to build up the structure of the snowflakes. And then what we do is repeat this in every segment of this structure. We repeat it here, we repeat it here, we repeat it here, and we repeat it here. And we get this again. That is the same, but a different scale. And we will repeat it again. Yes, and we can do this here, 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 in every segment of the curve. Okay? And we will get in the end the snowflake. We can repeat this infinite times. Yeah, we can just divide every segment now in the same. Let me just clean this, and we can have this small, okay, snowflakes. And we can repeat this all the time we wish. Yeah, as we see exactly the same at different scales. Yeah, the small one, the big one. Yeah, if we zoom in or zoom out, we will see exactly the same. That is a self similarity. Okay, this needs to happen in the fractals. If there is no self similarity, then it is not a fractal. And if we just think and we make this question now, we raise this question: are the financial markets self-similar? Yeah, so that is the first question that we need to try to answer. I don't know, what do you think? But I think that they are self-similar. Yeah, and the reason why is we have now in this slide different instruments at different time frames. But it's very difficult to say which instrument is any of this and which time frame are we talking about. It can be any of them, especially these two are very similar. These two are very similar. Yes, everything is very sideways here. So we know that it's a financial market. Yeah, that is an instrument, or we don't know exactly which one and which time frame. And then we can start just talking about self-similarity, because we see practically the same in the different instruments and at different scales. We will see all the time this kind of, let's say now, chaotic movements up and down, okay? And have a look, we have Forex instruments, the pound and what minute, the euro 5 minutes, and they are quite similar. Then we have the Bitcoin 15 minutes, the Standard & Poor, the crude oil, Apple, different time frames, different instruments, and in all of them, we see a similar behavior. But not also the self-similarity is visual. Okay, it's not that we see all the instruments like the same with these movements up or down. We also have a self-similarity in the statistic field. Okay, statistically, there are things that you can see here. This is part of our dashboard, and you will find the dashboard in the free forecast that I showed before. This is telling you how they behave, yeah, from the statistical point of view. And we have here marked something regarding the mean. This is analyzing all the movements for a certain period of time. Okay? When we see this, we have different time frames, different instruments, but all of them tend to the same. Yeah, and the same is they tend to balance the mean. The mean tends to 0 with the different movements. Okay? Try to compensate each other. What happened? Why we have then movements up or movements down? Why we have progression or regression? It's because of, if we see the price in the candle, we have 4 different: open, low, max, and close. The close is the one that allows this grow or drop. Okay, but all of them tend to compensate. Okay, that's the first characteristic that all the instruments share. And also this can be seen in the spectrum. Okay, the spectrum is this one, all the movements in a graphical point of view. We graphic and we put the dots for all the movements or the dispersion, and we can see that they are quite similar and symmetric in behavior. Yeah, they have a symmetrical behavior, all of them. Okay, if we see here, we see practically the same. Goes up, goes down. Yeah, we're talking about the same. Doesn't matter the instrument, the behavior tends to be the same. Is symmetric. So this also shows this compensation that we talked before. They always tend to a balance. Yeah, and that's something very important that defines the true self-similarity in the financial markets. We have a question from Harish. Structure one market may be similar to the other market around the world. It's not. I'm not catching exactly your question. Structure one market may be similar to the other market around the world. What we see in the end, if I understand your question, is everything is self-similar. Statistically, especially from the statistics point of view, we have similar behaviors shared by all the instruments. Doesn't matter what kind of instrument we're talking about, they share this characteristic. Okay, and that makes the financial markets very special. And this is what really start giving us a chance to forecast and predict what will be the coming movements in any kind of instruments. And now it's when we just start putting a barrier to the classic thinking about random markets. Yeah, markets, financial markets are not random. They have certain behavior that can be described and also can be predicted. Okay, and this is the starting point of it. Also, we talk about fractal dimension, just to understand this very easily. we know three dimensions mainly: the line, the surface, yeah, and the area. If you remember the numbers belonging to each one, we have dimension 1, we have dimension 2, and we have dimension 3. Okay, the fractals doesn't have any of these dimensions. It's not 1, it's not 2, it's not 3. They have a dimension that is in between each of these. And in the case of the financial markets, when we see the movements, we see this movement, and we'll see this concept later. So they occupy part of the surface, but they don't cover all the surface, and they are not aligned. We see in this case 3 lines, so we can see more. So that means the dimension of the different kind of instruments will be between 1 and 2. Okay, and this is what we see here. The euro dollar, for example, has a fractal dimension of 1.38 based on the studies we did, and you can find these studies in the book. The pound, 1.30. The dollar yen, 1.36. Okay, so we have then another characteristic of fractals. So we can say at this moment that financial markets are fractals. They have self-similarity, visual, of course, but also more important, statistical, and also we have fractal dimension. So they can be included in this set of fractals. Okay, everything is clear from here because this is important to understand what a fractal is, so we can continue moving forward with Elliott. Okay, because Elliott in 1930 describes the market using the Dow Jones as a template. He studied only the Dow Jones. He described this concept without knowing what a fractal was. Okay, and what Elliott thought is the markets, the economy, or the human being is always progressing. That's also true. And to create progression, so we need to create a certain kind of unbalance. So if we want to progress, we need to have a higher number of movements than when we correct. Okay, we retrace those movements. And that's why he built up this concept of 5 movements to describe progression. Okay, and we can find this in any kind of instrument, even in this graphic that we see here. So you can identify 5 waves in this segment. Okay, try to find out visually yourself these 5 waves if you can, because we will see now the waves in the next slide. Something very important, these 5 movements are built by waves, and the waves are these directional movements that are between a significant maximum and minimum. This is very important. Significant. Minimum and maximum. Okay, the market always is telling us this is a minimum and this is a maximum. Okay, perfect. Naihantan, you are mute. Yeah, you are mute. Any doubt that you have, you can send a question through the chat box. Okay. And if we identify the waves, yes, these 5 movements in the graphic that we will see next, we'll find 3 movements moving in the direction of the trend in the progression that are 1, 3, and 5, and 2 movements that are against it, that are 2 and 4. Yeah, they are the corrective movements. And if we just label the graphic we saw before, we can identify then the 5 waves we said before. So I have, sorry, two questions. Ilvania, if you cannot hear, the rest of the group is listening, they can hear, so it's okay. The problem should come from your side. Try to mute or mute. Yes, check your audio in your computer. And if that doesn't work, then just log off and log in again to the webinar, okay? Then we have another question from Rashesh. It's saying basically a head and shoulders, no, H&H and HL model, 5 repetitions. I think HH, HL, higher highs, higher low. Okay, now yes, yeah, exactly. So we have higher highs and higher lows. Uso is saying that the sound is okay. Yeah, okay, thanks for confirming. Exactly, it's very important, the highs and the lows to define the wave. Yeah, if there is not a maximum, so here we have, and let's go to mark the 5 wave here, and it's very important we understand these 4 principles, the 4 rules. You will use these rules to identify always 5 waves, okay? And based on how the waves behave, if they match or not, if they fulfill these rules or not, we can talk about then a sequence of 3 waves, okay, based on Elliott. So we have a minimum, we have a maximum, another minimum, maximum, minimum, maximum. 1, 2, 3, 4, 5. Perfect. Okay. So we have a question for Sibu. It's a nice question. Is the 5th level the best time to go short? Okay, Sibu, I will answer you now, and I will just create like a kind of uncertainty in everyone, probably. Okay, the market doesn't behave in 5 waves. That's what we will see later. And of course, it's never is good to go short if you identify a potential 5th wave. That will take you always to more mistakes than gains. Yeah, so try to avoid that behavior. Okay, don't go short if the trend is upward. Never. Okay, and the market really is not moving in 5 waves. Okay, so let's go to analyze the rules first, and then I will answer the question so we understand everything about how to use these rules. Okay, we identify the 5 waves, and then the next step is we need to see if these 5 waves are really a 5, as Elliott called. And to be a 5, we need to follow these 4 rules. Then, first rule, wave 2 must not exceed the start of wave 1. What does this mean? So that wave 2 never can end below, in this case, because we're in a bullish movement, below the beginning of the wave 1. So we cannot have 1, 2, 3, 4, 5. This cannot happen. Okay? 1, 2, 3, 4, and 5. This is wrong. Okay? Because we are not fulfilling the rule number 1. Okay? Wave 2 ends under the beginning of the wave 1. So this is not possible. But in this case, as we see in the chart, it's correct. Yeah, wave 2 never exceed the start of wave 1. So that's correct. Rule number 2, wave 3 is never the shortest of waves 1, 3, and 5. The wave 1, 3, and 5 are the motive waves. We will talk about all the time about motive waves or corrective waves. 1, 3, and 5 are motive. Why? Because they move in the same direction of the trend. And 2 and 4 in this case are corrective because they move against the main trend. Wave 3 is never the shortest of waves 1, 3, and 5. So if we measure the length of wave 1, the length in this case of wave 3, and the length of the wave 5, we will see that wave 3 is not the longest one in this case, but it's not the shortest one. Why? because wave 3 is shorter than wave 1, but it's higher, it's bigger than the wave 5. So in this case, the rule 3 is correct. What is not correct? The rule number 2. So we have, for example, wave 1, going to make it again, wave 1, wave 2, wave 3, wave 4, wave 5. 1, 2, 3, 4, and 5. This is correct. I think you know, because I'm talking about what is not correct. That is not correct. But you know why it is not correct? Feel free to answer in the chat box. It's quite good to see, because for me it's a way to know if you understand or not what I'm talking about. Okay? So we have a Raj is saying incorrect. Wave 3 is the shortest. Very good, Joseph. Rodrigo, la onda 3 nunca es la más corta. Exacto, Rodrigo, exactly. So wave 3 in this case is the shortest one. Okay? Okay, perfect. Yeah, it's the shortest one. So this count is not valid. Do you know what can be the valid count of this? One possible valid count? What we are saying wave 3 is from point 2 to or from point 3 to 4. So wave 3 always is from point 3 to point 4. Okay? Raj is saying other thing. Wave 4 is under wave 1. Very good. Yeah, exactly. Okay, so this means we will explain this again the second rule for Wonder over there. So wave 3 never is the shortest one. So in this case, if we say this is 1, this is 2, this is 3, this is 4, and this is 5, this is not correct for two reasons, but in this case, the most important one is that wave 3, if we measure the length, the minimum of the and the maximum, yeah, all the length of wave 1, wave 3, and wave 5, what we will see in this case is that wave 3 is shorter than wave 1 and is shorter than wave 5. So in this case, it's the shortest of all the motive waves, and that cannot happen. Okay, so that's why this count, okay, is not valid. Then this is telling you that we need to find another kind of counting or labeling in this case. And one potential is this one. 1, 2, 1, 2, 3. Okay, if we use Elliott principle, just pure, we can use this labeling. Okay, but we won't use this because it's too complex, and the different probabilities, okay, the different path that this counting can follow are really big, and to make decision based on this pattern is not the best. Okay, because we are expecting really a big movement for the wave 3, and that don't used to happen often. So this counting we will avoid. Okay, we will go for a simple way to understand the market. So we know now rule 1 and rule 2. Let's go to rule number 3. Wave 4 never enters the territory of wave 1, known also as overlaps. Okay, never you should see an overlap of wave 4. So this is quite in the limit, but they are not touching. That's why I use this as example. Okay, this is a territory of wave 1. Everything that is now in blue. And wave 4 ends just on top, okay, above this territory for the wave 1. So there is no overlap. So then in this case, it's correct. This can be labeled as wave 4. Usoa is asking lower high is wave 1, lower low is 0.2, wave 2, highest high is wave 3, highest low is wave 4. Exactly. Yeah, that's correct. So Okay, so this is territory, so it's not overlapping, so it's perfectly fine. So what happened then? We go to the same example as before. In this case, we have 1. Well, let's go to use a different one. Go to use this. 1, 2, 3, 4, and 5. 1, 2, 3, 4, and 5. This is correct. Of course, we know that it's not correct, but what is happening here then? Wave 4 enters in the territory of the wave 1. All this. So this then annulate this counting. It's not correct, and we need to go for a different one. Exactly. Dolly is saying wave 4 is entering wave 1 territory. Exactly. That's very good. So in this case, if we want to label it this in a different way, so we can use, in this case, A, B, C, X, Y, and this makes W. Okay, so we'll go to this kind of structures later. Yeah, but this is a more possible counting or labeling for this structure. Okay, good. So we have now 3 rules: 1, 2, and 3. And if you know this, you can just label any kind of graphic after this. The last rule, and not in all the Elliott Waves books and different kind of content that you can find, they mention this rule, but it's a very important one. And it's wave 2 is never a triangle. Okay, very important first to know what is a triangle from Elliott point of view. Triangles are formed with 5 internal waves that are compressing. Okay, so they get the shape of a flag or triangle. But you need to see always 5 internal waves. Yeah, and this is applicable to any kind of triangles. There is no triangle that has 3 waves. That is not a triangle. Okay, 5 waves or more, but mainly 5 waves. Okay, Abdul is asking if the wick of the candle enters. It's a very good question. If the wick of the candle enters wave 1 territory, then what happens? It's overlapping, yeah, because we need to understand the market as maximum, minimum always. Yes, if the market, if all the investors that are there create a low, okay, that low is created for some reason. Yeah, it's something in the sentiment that is pushing to that low. By that instance, yeah, you are overlapping in that case, and that cannot be a wave 4. Okay, these are wave visibles only in bullish or bearish markets, in any kind of market, Harish. But we will see. This is, I am explaining Elliott wave principle, but we will simplify it later because this is not happening. Okay, so we have this is not happening most of the time. Yeah, we will see some exceptions that we can identify 5 movements. Okay, like in this model, but the internal structure is different. Okay, so we have 5 movements. Yes, this is a triangle. Okay, and we can say this is 1, a nice triangle, 2, 3, 4, and 5. Okay, this is not correct. And the reason is simple. We are breaking the rule number 4. The wave 2 is a triangle. Yes, a symmetric triangle. So this cannot be happening. This counting is wrong. We need to find a different kind of labeling for this. Okay, but in this case, the wave 2 in this graphic is a zigzag. So it's perfectly fine. This is correct. So that's why in this graphic you can label it using the 5 waves model. Okay, we fulfill each of these 4 rules. Yeah, these need to be for you very important. You need to really stamp this, because you will use this even for different kind of patterns. Okay, just to understand how the market behaves. And if you want to be a purist in Elliott waves, you need to know these 4, and you can identify 5 waves. Okay, it's very, very important. We have some questions coming also. Joseph, how can we use this method to perhaps take profitable trades? We will see this at the end of the webinar. Yeah, that's the main purpose of this. Merhad is saying, by wave 2 should not be a triangle. You are considering this from a classic pattern point of view. Exactly, you need to have these 5 wave structures inside. If you don't have these 5 waves, then it's not a triangle. Can we use this in shorter intervals rather than years? It is examples. Yeah, you have here a monthly, but that's why we explained before the fractal. We're talking about fractals. Fractal, self-similarity. We see the same at different scale. We see the same from the monthly time frame to the minute time frame. Okay, we will move in any time frame, and we need to see the same pattern. A small pattern repeats, iterates to create higher scales patterns. Okay, always they are iterating from small scale to big scale, and you will always see the same. The zigzag is not a triangle because Paul is not taking the shape of a triangle. It's the shape of a zigzag. Yeah, and the most important for you, if you have doubts or it's difficult for you to identify, you need to count internal waves. So triangle always have 5. Zigzags always have 3. And in the zigzags, you always create, in this case, new lows. In the triangle, you will never create new lows. As much as can happen in a triangle, you can level before, but you can never create a low. If you create a new low here, then the pattern is not a triangle. This is not a triangle because I'm creating a new low here. Okay? So Rajesh is not able to, okay, don't worry, it's not able to relate fractals and Elliott waves. You will see it in a couple of slides. Yeah, and if you still don't understand, just let me know. Okay, this is clear, no? The 4 rules, okay? It's not a linear regression, Bonder. No. We don't use linear regressions with this. It's to identify, I think, what you're talking about prior slides, that is a rescaled range method to identify the fractal dimension. Yeah? Yeah, you identify, yeah, I know what you mean. You use the rescaled range method to identify the points, and then yes, the line in the end, this regression, yes, is your fractal dimension. Okay. Okay, so the rules are clear. Now we need to move next to the next one. So we will go deeper now into the different patterns. So we have more questions coming from Rodrigo. Las pendientes tienen que ser similares. Okay, the slopes need to be similar. I don't know what are you talking about of slopes and what kind of slopes. Yeah, if you tell me that, I can give you a proper answer. Okay. La 1 y la 3 por eje. We will see that that later, Rodrigo. Yes and no. There is a connection between them, of course, in time, okay, and speed. That we will see that then at the end when we take everything again, this fractal concept, okay. But yeah, you will see it depends on the speed. Sometimes you see that the third wave is faster and this breaks, but in the end there is a relationship between the speed of the first wave, the corrective wave, and the third wave. Okay, Okay, but we will see that later, Rodrigo. I will give you an answer. Can indicators like MAC be used to identify waves? Yes, you can use MAC to identify waves. Yeah, it's a good instrument to help you to identify them. But you shouldn't be using this as 100% true. Okay, it's a tool that you can use to help you sometimes to identify what's happening with the structure and say, okay, this is a wave or not. But if you label based on the MAC, you will make a lot of mistakes. How can this help if it is possible for sake of counting waves? Okay, you have that in the book, Mefrat. We need to do a different webinar for that. Yeah, how to use different indicators to help you to identify waves. Yeah, but you can use it, but not as a truth. Yeah, not as something that is 100% true. Okay, cool. So let's go to identify waves. So let's go deeper in this fractal structure, and with this finally you will understand the fractal concept. Okay, I need to check time. Okay, so we need to move faster because I really want to go to what really is happening in the financial markets. So we identify two kinds of waves: motor and corrective. Motive waves are those that move in the direction of the main trend, and in this case are 1, 3, and 5, and corrective are those that move against the trend, 2 and 4. And each of these have different internal structure, okay, based on Elliott. Corrective waves, yes, the one that goes against the main trend, are divided in 3 waves. And the motive waves that are moving in the same direction of the trend are divided into 5 waves. And that's what I said before. Elliott used this to create this imbalance and always see progression. I move 5 times upwards and 3 downwards. Yes, and I'm moving with 2 movements less, so then the corrective wave will be always shorter than the prior one, than the motive wave. And then I add another motive, corrective, and this way I always create progression. That's why Elliott talk about 5 waves, 5, 3, 1, 5, and 1, 3. And as we say about a fractal, we say this is a fractal, then each of these waves, 1, 3, and 5, internally are subdivided into another 5 waves. So if we zoom in this way, we will see 1, 2, 3, 4, 5. Okay? If we zoom in this way, we will see 1, 2, 3. Okay? If we zoom in this way 3, what we will see is a motive wave. So then Elliott said should be divided into 5 waves. 1, 2, 3, 4, 5. If we see inside. Wave 4, the same. It's a corrective wave. So what Elliott said is this should be divided into 3 waves. 1, 2, 3. Okay, and so on. Doesn't matter the scale we are talking about, always we will see 5, 3. And this is a fractal. Yeah, we're repeating exactly the same all the time at different scale. Exactly as the same as we saw with the snowflake. Yes, and we have here the explanation of before. So we have 5, 3, 5, 3, 5. Okay, and we can label this in different scales. Elliott has a special nomenclature for this. Yes, so how to distinguish the different degrees of wave. Okay, and for this you have a special way to label each degree. Yeah, but that is more no, it's not complex. It's more purist if you really want to go really into detail with Elliott waves and you want to do proper labeling. And then what happened in the corrective phase? A, B, C. In this structure, just to let you know, motive waves are divided into numbers, are labeled using numbers 1, 2, 3, 4, 5, and corrective waves are labeled using letters A, B, C. If we zoom in the wave A, what we will see? We will see 5 waves, 1, 2, 3, 4, 5. If we zoom in the wave B, what we will see? We will see 3 waves, 1, 2, 3. And if we zoom in the wave C, we will see again 5 waves, 3, 4, 5. Why? The question is, the answer to this question is why? Because wave A and C move in the direction of the main trend of the corrective wave, that is downward. And B is moving in the opposite direction. Okay? I'm happy you catch it. Wonder? Okay, and this, in the end, we repeat this infinite times at different scales, and we will see all the time 5-3, and this 5-3 will create a 5-3 of a bigger degree, higher scale, and so on. And with this, Elliott connect and identify the Fibonacci sequence in this pattern. That is also why another reason he used 5-3, because here we can see how the different waves, how many waves build different degree patterns. Okay, so we have in this case 5 for the motif waves, 3 for the corrective waves, so we have a total of 8 waves. And here we will see all the Fibonacci sequence, 3, 5, 8. We have a total of 21, then 13, total of 34. Then if we continue doing the same, the 5-3 at different scales, we get at a higher degree a total of 89 waves to build up one wave, one motif wave of this cycle degree is what he called cycle degree, and then another 55 for the corrective wave, 144. And this is the mathematic rule, the mathematic principle that connect every wave in the financial markets. Yeah, not only in the Elliott Wave principle, in any instrument we can see this. Okay, that's why we talk about, or Elliott talk about this, about fractals. Yes, because we see the same at any scale. Simple pattern that repeats infinite times. So we have a question, so where cycles come from? So the cycle is a way to define a certain amount of waves. Okay, so you have what the Elliott called a cycle degree, that is a set, a total of 144 waves. Yes, but nowadays, at least if you are really purist, you use this kind of labeling, and even in this case, it's quite difficult to match this in some scale. You can say, for example, I will start using cycle degrees in the weekly time frame, for example. Yeah, and then you go under and above. Yeah, lower degree, higher degree. Yeah. But think that Elliott do all this study manually, okay, with graphics made manually, and he didn't have all the scale or all the information that we have. Okay, and we to do nowadays today we can go to minutes or to ticks to build up graphic, but that information Elliott didn't have it. Okay, so that's why he mainly used daily weekly charts. Okay, good. So in this graphic that is the pound in a monthly time frame, we can identify different patterns, ABC. Okay, ABC, and here we have ABC, ABC, and the internal structure of this, we can see 5 waves. Okay, internal 5 waves, and in this case, we can talk about a very long 5th wave. Yeah, but now, applying these rules, we can start labeling any kind of graphic. Okay, and we can identify the waves within the chart. Yeah, and we will see the same, doesn't matter the time frame, okay, the scale we want to analyze. So good. Now we'll go to the corrective waves. Corrective waves are more complex than the motive waves. Motive waves are always 5, but corrective waves, you have different kind of structures. You have zigzags, you have flats, and you have triangles. Of these, really, we will focus mainly on the zigzags. Okay, flats happen, not often, but they happen. And we have 3 kinds of flats. Regular, this is the normal flat. We will see this later. Continuous, we will forget about this, and extended, we will forget about this. Okay, these 2, we won't use it, because if you use this kind of structures, then you increase the chance of error. Okay, so never label in first instance this kind of waves, a flat continuous or a flat extended. Don't use it, avoid them. Yeah, that's very important. Zigzags, we need to use them all, double or triple. Yeah, zigzag is very important structure. And triangles, we can use any of them, but mainly we will see the symmetric contracting, okay? The symmetric one. Yeah, that is a classic triangle. And then you have combinations, double and triple tree, that we will just, don't focus on that, but it's a combination of these simple structures, okay? But mainly zigzags are really important. The zigzag we saw before is a 3-wave structure, okay? A, B, C. Internally, 5, 3, 5. And these zigzags can repeat. Yeah, we can have one zigzag and then another zigzag after that one. But we need something to connect those zigzags. And here when we talk about double or triple zigzags. And this structure is the one that you will see the most in the financial markets. The most. Even you can use this 90% or 99% of the time, let's say. We have 3 waves, it's called W. Then we have a connector called X. Then we have again 3 waves, it's called Y. Then a connector, X. And then we have the chance of another zigzag, and it's called Z. And this, yes, you will see this a lot of time in financial markets, a lot of time. And this will be like your main labeling. Yes, you need to start really with this labeling, with zigzags. Never, never, never start labelings with these 5 ways that we mentioned before, because this hardly happens. Okay, always start with a simple pattern, the zigzag. Okay, because it's the one that will build up any kind of pattern of bigger degree. So 1, 2, 3, W, connector X, 1, 2, 3, Y, connector X, 1, 2, 3, Z. Okay, you can continue adding more zigzags, but then we switch the degree of wave. But mainly we will see one zigzag or double zigzag. In some occasions we can see triple zigzag. The flats we will use only one, and the flat will be 3 waves, A, B, C, where they practically end at the same level. Very important, in a flat, the wave B never exceeds the start of wave A, and wave C need to exceed the end of wave A. Just a little, not much, but create a new low. And wave B is very close to the start of wave A, but doesn't create a new high. Yes, if this creates a new high, then we will switch to different kind of labeling. Yeah, because then it won't be a flat. We won't use a flat for it. Yeah, and C needs to create a new low. If C doesn't create a new low, then we're in a different kind of pattern probably, and that won't be a flat. The internal structure is 3, 3, 5. based on Elliott. But this is really a very important advice. Don't get obsessed with the internal structures of the waves. Yeah, Piero is asking, in which time frame is better to count these waves? Okay, if you want to be a purist in Elliott wave, start in a 4 hours time frame. Don't go lower, because then you will start making a lot of mistakes, because you won't see the 5 waves pattern. Yeah, and you will start forcing the different waves just to fit that 5-3 pattern. Okay, that is what happened mostly when we see Elliott wave analysis from any kind of experts. Okay, experts that want to show Elliott wave patterns, they force most of the time the labelings just to match with Elliott 5-3. Yeah, but that is not really correct, and that is not useful and helpful at the moment that you need to make decisions. So this is a flat, and then we have the triangles. Okay, this yes happen. We have the symmetry, the descending. Okay, very important in this kind of triangles. Wave C and wave E. Okay, do not create a new low. The low always is in wave A. So wave C is very close of the end of wave A, and wave E is very close to the end of wave C. Okay, but don't create new lows. The same happens in the mirror case. Yeah, the ascending triangles, we don't create new highs. Yeah, and wave B and D, yeah, move upwards, create new highs. But the one that we will see the most is the symmetric triangle, 5 internal waves. Yeah, don't get obsessed with internal structure. Mainly it's 3. In some cases, the wave is simple and you will see 3, and then you will see only 1, and then you can see 3 again. Yeah, and 1 depending on how this is iterating. Yeah, but we will see 5 waves in total, symmetric and contracting. And something that you need to avoid and don't use it is the expanded triangle. Forget about that. Yeah, use these 3, mainly this one. Okay, good. And now we will talk about math sequence. But I will move forward because I want to start talking about what is really happening. I will explain the math sequence and the length relationship later, okay? So until here is clear the basic rules and the different structure for the corrective waves, the flat, the zigzags, and the triangles. If not, it's your moment to make a question. And then we have 20 minutes to move forward. Okay, no questions. Can we finish to anticipate waves? Yes, we wonder. I will explain that now. How to use Fibonacci. Okay, Fibonacci is really important in this. Everything is clear, Nicolas, thank you. Okay, now we saw about this model of 5-3. What I will tell you is this is not happening in financial market. You won't see this in the financial instrument. And if you want to see this and you want to make decisions based on this, you will make a lot of mistakes. And really it's not happening. The market is not moving in 5-3. So that's not happening. It's interesting and it's very useful to understand Elliott wave principle, because we will use all the math rules and we will use the fractal concept and we will use the zigzag structure, but the rest we won't use it. Yes, because this is what really is happening. What is the fractal? The pattern that we will see in financial market is this one. We talk about fractals, so we need to talk about a simple structure. 5-3 is too complex. Usoa is asking if we are going to learn Fibonacci. Yes, we will learn the basic of Fibonacci today. So the simple structure is a zigzag, but the zigzag is coming from even a simpler structure, more simple, that is a straight line. So we will use a straight line to build up this fractal. And what we will do is divide this in 3, and we will create the zigzag. Okay? To create this zigzag movement and create higher highs and higher lows, the length that we need to use to connect in these divisions that we mark in the line, that is the initiator, is the basic structure that we will use. We need more length, and this length will define the fractal dimension. There are 2 formulas to find it, mainly, that you can use. One is using this one. It's the log of the segments divided by the log of, these are the length of this tree divided the length of the divisions that we have. If we measure, I measured the PowerPoint in this case, it was showing 0.8 3 times, and in this case we have 0.8 3 times plus 0.95 that are the orange pieces. And this will return you the fractal dimension that was around 1.6, in this kind of structure. We created the zigzag, and this is our generator. Why? Because what we will do is start just iterating, doing the same here in any of the pieces of this fractal, and we repeat this infinite times, creating higher and lower degree scale zigzags. Okay? And we get this. We start just iterating the zigzag, different sizes. We iterate, keeping all the time the same time relationship, and we will get this. And when we see this, we start just iterating the zigzags, and we see, it can be a financial instrument, but really doesn't look like a financial instrument. Something in this iteration is missing. And what is happening here is that we need to keep in mind the time. Time is very, very important when we want to build this fractal. Okay? Time is another piece of the iteration, and time will change and iterate also in different ways with the length. And that way, yes, we can create the iteration, something, a draw very similar, simulation very similar to a financial market. But then we are iterating 2 elements. We are iterating the lengths. Okay, at the beginning we did that, and we keep the same time, and we iterate that infinite times to get this. But we saw this is not really happening. We need to iterate also the time to make the movement faster or slower. That is what happens in the financial market. Sometimes we have really fast and strong movements. For example, the drop of the S&P during the Corona was really a fast movement. Okay, very, very strong. What happened? We have a big length, but in a very short period of time, we are iterating the time. And that is what will create something very similar to financial markets. If we simulate in a model this. And that's why we talk then about a multi-fractal, because we're iterating, in this case, 2 pieces. We are iterating the price, and we are iterating the time. Okay? And when we move, for example, we see different speeds, in this case, for the wave, for this motive wave and this corrective wave. Okay? And this will change also the volatility. When we talk about the volatility in the market, the volatility is the standard deviation of the movements. But when the volatility is bigger, so that means that the movements are higher and probably faster. So when we move to the left side, we are increasing the volatility of the motive wave. And also we are decreasing the volatility of the corrective wave. Okay? They will balance each other. Yeah, but in one we increase volatility and another we decrease volatility. And the opposite if we move to the right side. Okay? So fractals, the basic pattern in financial markets is a zigzag, and this zigzag iterates in length, yeah, in price, and also in time. And when we talk about time, you have here a sample, and if you request a PowerPoint, you will have this graphic, and I encourage you to do this study and this research because it's really important if you want to have accurate forecasts. All the waves that you see marked, they are marked with lines, green, red, green, and then blue and orange. All these waves are connected in length, yes, and in time. And you see this here, in this example here. So in this case, it's the pound dollar, and are the last movements. And we see in this table everything that is happening just here. You can continue the study and try to find some proofs, get some findings if you analyze a higher time scale. Okay, but if we see here, we have where the wave starts, where the wave ends. We have the length and we have the time that took to the wave to finish, to mature. And it's quite nice to see the relationship between the length and between the time. If you remember the Fibonacci sequence, we have one number, is 0618. In this case, we are very close to this number. 382, we are very close to this number. 1, we are very close. 1.5 is another one, we are very close. We are very close to 618, again 0.5. 854, we are extremely close, and we are very close to 1. And that's telling us that the time is not random. So when we have, and this is very important, when we have a motive wave, the way in that the way that with this motive wave is built in length, in time, and also in speed, something we are not showing here, will connect with the corrective wave in the same, in length, in time, and in speed. So then we use this information to create what we call an attractor. An attractor is an area where the price tends to go. When the price or the quote reach this area, and we're talking about an area that is marked in length and also in time, then the price will be rejected and will move to the next attractor. Okay? And in this case, the next attractor can be here, or the next attractor can be here. Okay? But we will see, based on the development of the movements once the attractor is reached, what is the highest probability pattern next to it. Okay, so we need to continue analyzing the market because everything that is happening at this moment will conditionate what will come later. Okay, that's very important. That's why we need to always see what's happening in the market and analyze every movement. Yeah, but this is very important. Then we say that the price, the quote, moves from one attractor to another, and those attractors are defined by length and by time. Okay, and this is how the market iterates. And this is very important. So it doesn't matter the internal structure that you will have here. What for you needs to be really important is where to find the attractor. Because sooner or later, the price will reach this area and then you will have a reaction. Okay? And that's how the market moves. Yeah? And everything happens in zigzags. No 5 waves, zigzags. The basic structure is 3 waves, and this iterates infinite times in the financial markets in length and in time. Then Fibonacci, because they were asking for Fibonacci, how to use it. We will use mainly the retracements and the projections. Okay, and here you have different patterns that repeat in any kind of instrument. So for example, the first pattern, we have first wave, we call W, as we said before, we have corrective wave X, and then we have a wave Y. So the price always moves from one attractor to the other. When the corrective wave ends in the area of 0.382 and 0.5, and we have a bounce, and the price just gets rejected, we have a higher chance that the next wave, the next motive wave, will end in this attractor that stays between 0.5 and 0.618 times W. How you get that? Simple. You take the length of the wave W and you project that length at the end of the corrective wave, and then you will get this area. Okay? So if your retracement is between 0.32 and 0.5, the higher chances you have a next wave in this area, but then this wave, the wave Y, will reach the maturity and probably you will get a corrective wave. So this is telling you that you have higher chance just to see a high here, so you can take a total profit or a partial profit at this place. Okay, don't wait longer, because this pattern really repeats a lot of the time in financial market. And if the retracement was 0.382, 0.5, then the maturity mainly will be around this level, and you can find it by yourself. Yes, so I'm giving you a lot of insight here, and you can find all this in the book. What happens if you have a retracement in 0.50618? Then the way Y, you have more chances to end between this area 0.584 and 1.236. Okay, hardly you reach this area of 0.618. Mainly you will reach the equal area of wave W. Okay, that is 0.5854, 1.236. Okay, so wave X retraced to 0.618, and then you see a reaction here. You have higher probability to reach this area. Yes, these two patterns, with these two patterns, you can start just building higher degree iterations. Yeah, so you can combine these several times. And the most important for you is you decide the strategy and the way you decide to enter in the market. But if you see this retracement, you know where you prefer to take profit. If you see this retracement, you know where do you prefer to take profit. Yeah, that's very important. Then you decide how to enter. If you want to enter when the retracement is happening, when the wave X is not finished yet, something I do not recommend. Okay, and yes, I will wait to reaction and see the internal structure in this case. Yeah, lower degrees, how they are building up. Camilo is asking, hola, mi pregunta es, ¿cuándo son las entradas? Por ejemplo, si llega la ruptura arriba. Okay, Camilo, yeah. Camilo is asking when to enter in the market. I will, for this webinar, I will leave this up to you. There are specific levels that increase the chance of success when you enter. Okay, when you enter in the retracement area, that is not good because you are in an uncertainty area, so there is no trend happening here, and you have equal chances practically to move downward or to move upward. So this is like throwing a coin in the air. It's not the best. Okay, so the better is always wait to have a reaction in this area, in any of these areas. And then, for example, if you're analyzing, that's why it's very important. Don't go only to the 15 minutes, 5 minutes charts. Yes, you need to get all the perspective of the instrument. Start always with the higher degree waves and then go lower. Yes, to daily 4 hours. The best time frame always is 4 hours. And then you can move up and down. But if you identify the pattern in the 4 hours, then you can make wise decisions or better decisions, more accurate, if you go to lower degrees. Because when you identify the bounce here and the corrective wave ended in the 4 hours, you still have a lot of time to go to lower degrees. For example, 30 minutes, 15 minutes, 5 minutes, identify the sequence, and then just enter in those time frames, okay? That is much better than just only focusing, for example, in the 5 minutes. Daman is asking what is the success rate with Elliott Wave. So I will show you just now, Camilo, what is the success. So we have these patterns, we talk about time. So it's very important that you really make this study, analyze the sequence of the instruments that you are investing, your favorite instruments always, and create this study and start understanding how the market behaves based on these patterns. Okay, very, very important. And then you will be able to make very wise decisions, more accurate. And then we can combine these simple patterns to create more complex patterns. So this is pattern number 5 based on the book. Okay, so you have more patterns there. So then here we have real examples. Yeah, and then we will see what is the rate of success with this. That's why I will show you how our artificial intelligence works, because it's compiling all that I'm telling you now. We create an algorithm with that, yes, and it trades by itself. Yeah, it's investing and taking decisions by itself, following this and more knowledge, more KPIs to enter in the market. Yeah, but these are real examples. So we identify here wave W, wave X. So this means if we continue moving higher, and this is a 4-hour chart, we need to reach the first or the second attractor. Yes, in this case, you can take a partial profit in this one, in the first one, and take a final profit in the second one, based on this. And this is incomplete. Okay, this is what really happened in the financial market, and when you are investing, you need to make decisions without the pattern is complete. So in this case, you have very good 3 waves, W, 1, 2, 3, and then a corrective that is quite shallow, but it's very well connected in time and in speed. Yeah, the length is shallow, but the time and the speed are perfect. I will go to the prior slide. The best, I will show you, but the best is if you ask me the PowerPoint, because I know that this slide, the prior slide, will be very useful and helpful for you. And you need to base your studies on that, okay? I will show you later, yeah, the prior one. But request a PowerPoint, really. So if we buy, yes, and the price just stay above this key level, that these graphics are for free in our website, yes? In the financialforecast.com, in free forecast, you have this for free, access to this. So you will see this key level. That means that while the price stays above this level, we should be developing an upward trend. If we have a break of this level, then the chances to continue upward are really low, and probably we will develop movements to downward. Yeah, this level is very, very important. Okay, so we are above the level. We have this attractor. This is a 4-hour time frame. I can go to lower time frame to make decisions. What happened later? It reached in perfect time the second attractor, or the first attractor, sorry. Then we have correction. We don't break the key level. We're still above, and then we reach the second area, and we reach the 2 attractors. Okay, that's what happened. Very easy. Only if we work with zigzags. The next one. This is the dashboard, and the dashboard analyzes the trend from a fractal point of view. And this is really a very helpful tool that you have for free in the forecast. So you have this, the trend, the overall trend for this time frame in the pound is downward. Okay, perfect. And if we see the structure, we have a zigzag. This is still ongoing, it's developing. So we continue seeing movement to the downward. I can go to lower time frames then to make decisions and to invest in this pair to the bearish side. And the price needs to stay below 1.3094. So if I follow these guidelines and I sell, then we see that we reach the first attractor at daily time frame, because we see all the time the same 3 waves pattern, and we will make profit with it. Next example. This is very, very nice. The corrective waves in this case Usoa, this is, it's very difficult for me to understand Fibonacci retracement tool. Please, can you explain how to use it for one entry signal? For one entry signal to stop loss, trade, take profit. Uso, I will explain you this probably in another webinar. You can contact me and I can try to explain you how to use it. But in our case, we never use retracements to make decisions or to place an entry. The retracement in this case is for us to have like the compass or to define the attractor with the time and with the speed for the corrective wave. And once the corrective wave is complete, we start just triggering the different KPIs in order to enter in the market, okay? So we have this corrective wave, and here we have the attractor, and the orange lines are marking the ideal time and speed. And we have the end of this corrective wave in this area. So then here, plus the trend is downward, the chances to see a continuation to break the key level, this, and reach the attractors is really high. Let's see what happened then. That we reached the two attractors. Yeah, see how the price behaves around the key area. Yes, this key level. It ends break with a gap and continue moving downward. Yeah, and reach the two attractors. It's very easy to follow. Looks very easy. How did you come up? We have a question, sorry, from Yugi. How did you come up with the key level, please? So you will find the key levels for free in the graphics that we have in the website. I cannot tell you how we calculate this. Yes, this is more complex, and it's something that we keep in our pocket. Okay, took us quite a lot of time to find out all this knowledge. Yeah, but all this knowledge is in the artificial intelligence. Okay, so we have the information with the dashboard, we have the pattern, so we need to identify this, and then we can make wiser decisions and more accurate. Yeah, and always, as you see, the price moves from attractor to attractor. Yeah, so this makes very easy to identify the take profit areas. So then you have a lot of examples here. Then what happened when we get all this information? Yes, we build up an algorithm based on this knowledge. And this artificial intelligence, what it does get all this is working at this moment with the 6 instruments, Forex instruments, take the time real data, and then analyze it, detect all the behaviors, define the patterns, and analyze what are the high probable different iterations from this fractal. And based on that, if the probability of success is high, then make a decision, exactly as we saw before. This is what happened with the pound. The graphic you see here are from 2018. Yes, it's how this model behaved from 2018 using these principles and other ones. So we have a profit, monthly profit 3.6%, an accuracy of 98.8 profitable positions. Yes, 40 consecutive wins, 1.2 lost positions are mainly coming from swaps. For the dollar yen, 3.6% profitable per month, 87 practically percent accuracy, 6 consecutive wins. Okay, really good applying these principles to these instruments. What happened with the Kiwi? 91% accurate, consecutive 9 wins, 3.45 monthly profit. Okay, the euro dollar, 95% accuracy, almost 6% profit, 15 consecutive wins. So this is this model and this concept that we explained before works really well. And the Aussie, in this case, we have 96.5% accuracy, and the US CAD 90.1% accuracy. And we have this this tool working, and it's working perfectly well, and it's accessible to everyone if you want to try it. Yeah, it works really nice. It took us a lot of time to develop this tool. We continue improving the tool, improving the algorithm that is behind it, improving all of this this intelligence and how to make the decision based on this. Thank you, Merkel. These are awesome results. We are super happy. Our clients are really, really happy with it. So we continue with this, and you can see more about the artificial intelligence in the website in the tab AI tools. So we will go to that now to see the different tabs to get all the free graphics, information about the artificial intelligence, free videos, and so on. Okay, so if you want to request a PowerPoint, you have very nice information here. You need to send an email to info@thefinancialforecast.com. If you have any question that also, ojo, that I couldn't answer, how to use retracements in more detail, just send me an email. I will answer you. I will give you some information. If you want, for example, to share your countings, do the same. For me, it's perfectly fine. I will be very pleased just to give you feedback. No problem at all. I hope you learned quite a lot today and you can apply this. So let's go to the website. Remember, the address is info@thefinancialforecast.com. And if we go here to the website, you will have the free graphics in the tab Free Forecast. Okay, all the graphics that we saw with the tractors, the key levels, and so on, they are for free. Yes. If you want to know more about the artificial intelligence, in the tab AI Solutions, yes, you will have results. You can request me all the history of the artificial intelligence, how it is performing. You have all the details in monthly return. Everything is here if you want to see more about this. Okay, this is converting all this knowledge or this fractal behavior that we saw into an algorithm, and this is great because you avoid to use the emotions. It's really based on analytics and how the instrument behaves, and it's building the different patterns. If you want to have some educational content, you want to see free videos because you want to learn more about financial markets, indicators, Fibonacci, and so on, you have the free onboarding. Okay, you access here, you have it in Spanish and also in English, and you have a total of 7 classes, yes, around 1 hour, and you will get a lot of content also here with the free onboarding. And if you want to learn how to do, for example, this time thing, how to analyze the market to define the patterns and find out the connections, you want to know more about Fibonacci and go really into detail, you want to improve the way you are investing because you really like this approach, I'm imparting coaching sessions. You can contact me and we can start with that. Yeah, it's just one-to-one, and we can go into details and just focus on the areas that you really want to. Okay, so you have all the info. Tomorrow morning, you will have this webinar, the recording in the blog will be the first one over here. Yes, so if you want to refresh it, see it again, whatever, you will have it in the blog. Okay, perfect. That's all for today. Thanks a lot, all of you, for the participation. It's really, really nice. I hope you really enjoyed this webinar and you got a lot of knowledge from it. And I will wait for your emails, contact, and see your progress. Okay, thank you. Have a nice week and see you in the next webinar. Goodbye.